under the respective tax laws. Again, in that scenario, you cannot avail the tax amnesty. Furthermore, matters where the proceeds or assets involved are derived from a criminal offense. So what does this mean? That a smuggler can't come and say, well, actually, these are the proceeds of the smuggling operations I've been running for a decade or so, and now I want to declare that under the amnesty. Thank you, but no thanks. They can't. Gold and precious stones. Now, this is very important. I want you to pay attention here. And this is slightly different from the previous amnesties. Gold and precious stones cannot be declared under this amnesty. And I want you to start thinking why. I'll be asking you. Bearer price bonds cannot be declared under this amnesty. Bearer assets. What are bearer assets? Which are not in any one person's name. For example, open share or investment instruments. They cannot be declared under this amnesty scheme. Now, my question to you is, why these last three categories? If you are buying movable assets, immovable assets, even sales, expenditures, why restrict these? Does it make any sense? What is the purpose? Anyone? I'll give you like 40 seconds for your feedbacks.
The money is saying they can be used for future. They are same as cash.
Okay, more. What was this last gentleman's full name again?
There's another one. Repeat the question. Haris Ahmed is saying to stop the black money circulation. Gulrez Raza is saying perhaps because there will be no audit trail of such assets to prove to authorities that they are legitimate. Ahmad Ahmed is saying market value changes. Falak Iqbal Naqvi is saying because of their implication in money laundering.
Very good. We got three right answers. Well, it's not because of market values. They can be determined, and you do know the values of the price bonds or bearer assets or what's the gold rate, etc. It's because it can be used in money laundering because it's bearer, not in a specific person's name. And we all know Pakistan struggles with FATF's grey list. So it was also one of the requirements to introduce stringent controls around gold, precious stones, bearer assets, including price bonds. So this is addressing that. Also, it can be used to abuse the system, just like in the case of cash previously. So the first guy, and there were two other gentlemen, they were absolutely right. Well done to you guys. It is introduced to curb the menace of money laundering or whitening the proceeds of criminal activities through these bearer assets or gold and precious stones. Gee, you wanted to say something, Arun?
Yeah, they were other interesting answers, so I just thought I'd relate them as well. So, Amna Sani has given a good answer, Faisal Manzoor has given an answer.
Okay, now that they have taken the trouble to reply, I think you should quickly go through that.
Amna is saying because the black money has to be physically injected into the economy through the amnesty, price bonds, stones, etc., cannot be linked to a person. Nuruddin Demani said the aim of another comment from him. The aim of amnesty is to bring money in economy, but this is against amnesty. Faisal Manzoor is saying these assets are like Benamidar. What is Benamidar? I mean, somebody's asking that question.
Benamidar is the person who is holding the Benami assets.
Okay.
Who has the Benami assets.
It's easy to hide ownership.
Okay, great. So now that we are clear on this, I think you guys have a few questions. So let's quickly take a few questions before we go into the next section. In this section, we have covered the exclusions. So all these people and assets cannot be declared under the tax amnesty scheme introduced by way of the Asset Declaration Ordinance 2019. G.
If someone is filing for the first time, his source of income is always agriculture. from where he made all his assets. And now he wants to file his tax return. Should he go through Amnesty or should he simply file his tax return?
This is Tawfiq.
Okay, Tawfiq, you are taking free of cost tax advisory service. Okay, thank ACCA for that. Well, the thing is this, that you should, even if you were not having taxable income, but held assets in your name. For example, if you have agricultural income, this means you will definitely have agricultural land in your name, most likely, if not anything else. Even by virtue of that, you were required to be registered for NTN and filing your return. Now, there are two aspects to the regulatory requirement here. One is paying your due taxes here. Now, since agricultural income is largely a subject of provincial taxes, and as such, there are no material income taxes on that, you can get away with that side. However, you still needed to file your income tax return. And by not filing that, you have made a violation. So to answer your question, which side should you go? Amnesty might be a good idea. Just wait for a few days to see what the rules define. Whether that violation with regard to not filing your return would also be condoned if you file the amnesty. Because at the moment, if you just file by way of an amnesty, one thing is clear, if you did not pay any of the due taxes, that would be legitimized, that would be condoned, it's done away with it, you are fine with it. But you have not filed your tax returns. What would be done with regard to that? For that, we have to wait for the finalized rules to be released by FPR. And just before the session we were discussing, hopefully we'll hold a brief session on that too, once FPR releases those rules. So next.
Waqas Ahmed asked, do you think the level of uncertainty for the current amnesty scheme isn't that much as it was used to be in the past? Is this the only factor to guarantee the success?
Well, on the contrary, I think there is more uncertainty at the moment. When we are doing these sessions from ACCA's platform, we have to follow a very particular code, and we have to stay really within the professional ambit, and there are many things which we should not be speaking on these forums. But look around yourself, turn on your television, read the news and all that, and you'll see that generally there is more of an atmosphere of uncertainty at the moment. So in my opinion, there is more uncertainty at the moment. How can that be reduced? How can this amnesty be made a success? As I shared previously, we'll be discussing that in more details in the last session of today's topic.
Mahmood says, is appellate tribunal inland revenue a court of law for the purpose of this ordinance?
Well, court of law is normally referred to as high courts, but with regard to tax proceedings, and in the context of this amnesty scheme, yes.
Someone who is not a tax filer and wants to avail amnesty.
You have to say the name who's asking the
question.
question.
Can he avail that? Sanjay Kumar.
Say that again, the question.
Someone who is not a filer and wants to avail amnesty scheme, can he avail that?
Well, we did hear the Minister of State for Revenue saying only the filers would be able to avail that. There's nothing restrictive in that sense in the ordinance itself. However, as I've shared with you, the rules are being formulated at the moment. Remember how it works. The ordinance is the legal body. It has given the law. To address the practical question and how it would actually work in practice, the rules are formed. Just like we had in income tax ordinance and the income tax rules, we had the sales tax act and the sales tax rules. So we have this asset declaration ordinance, and now its rules are being formulated. It is very much possible that since the minister has said that there might be some restriction to that effect put in the rules. So we'll have to wait for the release of the rules. Next.
Gurreza asks, can I please ask the trader, what about an individual who wants to declare his gold assets which he purchased with legitimate funds with proof and invoices?
If you have the proof of invoices, their funds were legitimate, then simply file your tax return.
Okay, and Omer Zaheer asks, is it applicable on movable assets like vehicles?
Very good question. Just hold your horses. It's coming up in the next session. That's all. Great. Thank you. So let's move forward. now that we have discussed about the exclusions as well, let's move forward and discuss about the tax rates and values, and where the question that was asked in the last would also be addressed. So these are the tax rates and values. If you see on your screen, you have three columns. The first one is outlining the class of assets, income or expense. The second one is highlighting what would be the value that would have to be declared. And the third one is showing the applicable rates. So the class of assets, we have domestic immovable properties like land, domestic immovable properties which are constructed, buildings, houses, and plazas, foreign liquid assets not repatriated, foreign liquid assets repatriated, unexplained expenditure, undisclosed sales, and all assets except domestic immovable properties. So the answer to your question, whether the movable assets can be declared, here is the answer, yes. So अगर गाड़ी शाड़ी आपने declare नहीं की, now is the time to do that. Especially अगर उसके आपके पास paper trail नहीं है. So let's go through this because this is important. For domestic immovable properties, such as land, the applicable tax rate would be 1.5%. However, it would need to be on the higher of 150% of the value prescribed by FPR under section 68 of the income tax ordinance or 150% of DC value. So what is all this jargon here? Let me help you with that. What's happening at the moment is there is a very complex and unique system in operation in Pakistan with regard to taxes on properties. The properties are registered on using DC values. DC values are very low, as low as even 1/5 of the actual market value. Then there is advanced income tax, which is collected on the FPR values. That is a fairly recent phenomena introduced in the last few years. These are the values for major urban centers announced by FPR, which are higher than DC values, but still comparatively very low than market values. They are even 50% lower than market values at times. So the problem is that, for example, you buy a property for 2 crores. Okay, I'll just say in the international denominations. You buy a property for 20 million rupees. The DC market value might be just 5 million. And the FPR market value, in fact, might actually be 1 million. So what's happening is the actual market value is 20 million. The proceeds involved is 20 million. But the FPR value on which you are paying the advance income tax is 1 million. And the value on which you are more likely to register your property, the DC value, unless obviously you want to register at higher value, pay higher taxes, you are such a good person, then amazing. Otherwise, just following the law, if you are just registering it at the DC value, you are registering it at 5 million. So can you see the problem? With regard to DC value, there would be a difference of 15 million. With regard to the FPR value for income tax purposes, there would be a difference of 1 million. However, this is legitimate because the law has prescribed this system, this mechanism, so this has been followed. However, with regard to the amnesty, they have said, well, not so quickly, not so smart. We are giving you very low rates already, but still you need to pay your fair share. So you would need to pay 150% of the FPR value or 150% of the DC value, whichever is higher, which should be fairly close to the market value. So this 1.5% of this value would most likely be 2.25% of the value on which you would have registered the asset. So your effective tax rate would become 2.25%, which is still fairly low, especially if you have not declared your property. Instead of paying 3%, being a non-filer, you end up paying 1.5% of this value or 2.25% of the declared value. You still end up saving 1.5 to 0.75%. Now think about that in terms of the total amount, 20 million, 30 million. That's a big saving if you ask me. Next up, domestic immovable properties, for the constructed structures. The same concept is applicable for the same reason as I just discussed in details. Assets value would be taken to be at least 100% of DC value, where FBR value has not been notified for the constructed property. Then we have foreign liquid assets not repatriated. You'll have to take the higher of the fair market value or cost determined using exchange rate on which date? At the date of the declaration date. So whenever you are making the declaration, at that date you'll take the exchange rate to see what is the fair market value and what was the historical cost of foreign liquid assets which are not repatriated. And then that would be taxed at the highest tax slab within this